Hello, World Wide Web. Welcome back to my stock channel. This is James, your favorite stock picker guy. Carnival Cruise Lines is going to the moon, in my opinion. I'm going to give you why I have this opinion. It's $12.18 a share today. I bought in just over a month ago for $8.75 when it was in one of these little pits here. It does move with the Dow and with the S&P, and on some days it doesn't. On a really bad Dow day, it will crash down a little bit with it. But the earnings report is coming out June 20th, and this company is incredibly close to being profitable again. This is why I'm so excited about it. This is a $12 stock right now, and it was a $50 stock in 2019, 2018, back before COVID. If you remember correctly, they shut all the cruise ships down. They literally couldn't do any cruises for about a year or two for 2020 and 2021. They were forced to issue double their amount of shares. They just did that more recently. They diluted the stock, and they also borrowed an extra, I believe it's $10 billion. We'll take a look at that as well. So for them to get back to 2019 levels, we'll have to see them do a stock buyback. And in my opinion, it's already happened. It's already happening now. The law requires them to report to their shareholders they're buying back the stock within 1 quarter of them actually buying back the stock. They don't have to tell us now. They have to tell us on June 20th if they did it in the previous quarter. That is their obligation. And I believe we've been witnessing that. I think they've been scooping up 1 million shares a day. The company's boats, I believe there's 93 of them. They're all in action. They're all floating. They're all cruising. They're all full. Everyone's packed in like sardines. Probably much better occupancy than 2019. Thanks to inflation, the prices are higher. Because of the services inflation sector, they don't have a problem with that. This is a worldwide type company. They can pick up their labor force from any port in the world. So they can go to whatever country has the best employment situation, pricing, and gladly find workers that will work on their boats. They don't have to deal with Americans that need more money. And for that reason, I really like this stock. For another reason is they should not be as prone to any recession that we might be having here or that Europe might be having. These ships hold a few thousand people. They're very big, and the port cities include tens of millions of people in the city itself and the outlying areas within a short driving distance. For the whole state of Florida, we have Tampa, Cape Canaveral, and Miami, maybe Lauderdale, maybe 4 ports, and 22 million people. Will drive to one of these ports in Florida. People drive down from Georgia, or they might go to Savannah or Mobile, Alabama, if you're up north. But each port services tens of millions of potential clients. They only need to sell a couple of thousand tickets. This is not like this is, if you look at the after 2008 Carnival performance during the recession, they did just fine. They didn't hurt at all. They had no problem filling up their boats. There's no problem filling up your boats even in a recession. There's plenty of rich people that would love to take a cheap cruise. And at this rate, it's now the cheapest vacation alternative, thanks to the hotel rooms being fully priced right now, around $200 a night. You can get a cruise for much less than that. And a cruise will actually take you somewhere. You don't have to add airfare onto that, hopefully. And you don't have to, pay for your food, hopefully. And a lot of other expenses are eliminated. And then you get the casino in there too. They got the built-in casino. So they end up fleecing their customers for a whole lot more than the cruise tickets. Obviously, they've now gotten into the business where they own the destination that they bring you to. They're buying islands and bringing people to the islands. But let's take a look at this is the 1-year chart right here. You can see a waffle up at the end here. This is on Norwegian and Royal Cruise, the competitors. Their earnings reports came out recently, and news of their boats becoming full. Citigroup upgraded them to a buy, going up to $18 by year's end on the high note. I think it's on its way back to 50. I think it's going to hit 50 inevitably within 2 years or within a year and a half. It'll probably get there early once the world knows that that's where it's going. It's just going to take it there. So I think it's going to be there a little bit early, maybe a year, year and a half. A great one to buy options on. The $20 options, the $25 options for January are really hot. People are buying them up, and they should hit. There's a very good chance of them hitting. When earnings comes out, I'm expecting this stock to be the same price as Norwegian Cruise Lines is today, which is about $15. That's in 3 weeks. The reason I say that is because their earnings are projected to be the same earnings that Norwegian put out last time. They're getting better every quarter. They're losing less money coming out of this COVID trend. They went from losing 1.6 billion to only losing 500 million. I'm projecting on this next one here, we're going to see a right side up finally. They're done with their COVID back in the water costs, and I think they're back in business. It's a company that does, before COVID, $21 billion a year. In 2019, 2018, they did, I can barely read this here, 18.8 million. So about 20 billion a year. In profit, they bring in about $3 billion a year. The stock buyback is going to cost them about $6 billion total if they buy it at these prices. So the stock buyback might not be a full one. It might be a 10% one this quarter. It might be a 5% one. But I think there's a stock buyback going on first. They announced they're not going to pay their debtors and their credit cards off yet. And I think that means they're going to use their money for something else, which would be buying back those shares. I would expect that they would want to buy them for $10 to $12 a share and not for $30 a share. So for that reason, I think the stock buyback is going to go on first. Why release great earnings when you can just have to pay more for your stock? That just wouldn't make any business sense. And for that reason, I think they're doing the stock buyback. But if we get back, the last year was 2022, 12 billion for the year. Now, last quarter, they did 4.44 billion. So they're at an $18 billion pace right now as of February of 2023. And that's still not the pace. That's not full boats. Now we have full boats. I'm expecting this year to come up probably to $6 to $7 billion per quarter. I'm expecting a $25 to $28 billion a year company from here on out. They've added more rooms. They took the time when COVID was putting everyone out of the water and making it so they couldn't do cruises. They took that time to add more rooms to all of their boats. The prices are about 15 to 20% higher now. A lot of things have changed. But anyhow, I think we're going to be in the profit next quarter, or we're just going to lose a very, very, very tiny amount of money. Royal blew away estimates by 20 cents earnings per share. This is their balance sheet. Annually, you can see what happened. COVID, pre-COVID, $20 billion. Now it's $44 billion in debt. As of the latest quarter, $45 billion in debt. So they've added $20 billion to their debt. Their overhead is going to be more. They have to make the extra monthly payment is going to be double what it used to be. A good chunk of their operating costs have doubled. Their operating costs are, well, I don't even know if this is really relevant to look at. They have 1.26 billion shares outstanding. Operating cost is going to be over here. Sorry about that. $2 billion operating expense for the quarter. So about $8 billion of it is their current operating expense for just this year's quarter. So Let me zoom in on that, make sure I'm saying this right. Yep, $2 billion is their operating expense, and they're bringing in $6 billion. So then you have cost of product and gas and fuel and stuff like that. But you can see where it's a profitable business. They're going to buy back their shares. They're going to do more money than they did before. They are charging more money than they did before. They're not going to have the labor problems and the recession problems and all those other problems. They will put their dividend back on the stock eventually. This is one that you can just say absolutely for certain is going to be back to $40, $50 a share. You just don't know when. That's the only thing. And when you figure out when, then you should probably buy some now, because it's, if you can quadruple your money in 4 years or 2 years, I'm pretty sure that's a hell of a deal compared to the interest on most things. You should be hot on Carnival. I think it's going to pucker up to 14 before they even release the earnings. And then earnings shock is going to send it up to just around 15 and change. Now this one does come down with the Dow. We're going to have a bad possible Fed interest rate increase on February 15th, and Jerome Powell's going to go talk about how he might do it again, scare the bejesus out of everybody, and it should send the market crashing. We might see another big Dow day before earnings. You could pick this thing up in the 11s. You could pick it up in the low 11s. Right when it hits 11, though, it goes into shock and launches upwards. The upwards shock goes higher and higher, and the level it launches at gets higher and higher. It was 875, then it was 950, then it was 10, then it was 1050. The latest launch came from 1140 was the bottom. So then where's the next bottom? It could be higher than that. But interest is growing, people are piling in, and this is the results. $12.18. Wow. This thing was $11.85 on Thursday. I bought a ton of options a month ago. Did really, really well, obviously. Bought some Norwegian also, just absolutely bonkers. The boats are full. They're destined to turn a profit next quarter, so look at that one also. But your October earnings options are 2 quarters out. You'll get lots of good news, lots of hype, lots of puckering up, lots of good news about profitability. All the way along the way, it should be a pretty stress-free journey. I highly recommend CCL, Carnival Cruise Lines. Buy it in the 11s if you can, but grab a little bit of it here at least so that you're in. And take a look at some of the options. October and January will be 2 and 3 earnings reports away. And if you want to play for June 20th earnings, you can buy the July options. And this thing should be hitting. It should be hitting pretty strong all month long. It might have some down days, but the up days are shockingly exciting. And some days it just goes right in the face of the market. Market can crash 300-400 points, and this thing just doesn't care. Amazing stock. Check it out. Last call, all aboard Carnival Cruise Lines. Have a wonderful day. Please like the video and subscribe to my channel. I'll be doing more videos and updates of your favorite companies. Thank you so much. Have a great day.